Hey everybody, this is Mitch with New Deal Forex with likely the most important trading video I've created for this channel thus far. This is 10 things I've learned about trading Forex after 1 year. So it's going to get into it. Let's not delay the process. First, I do believe strongly in documentation. So let me go ahead and pull up my Instagram account here. As you can see, this is my Instagram account. You're welcome to follow me at emitchell07. I post trades I've taken. This is, for instance, a trade on, no, not that one. Okay, here's a live video of a trade that I took in what was it? I think it was shorting the pound, maybe. Yeah, shorting the pound. It's kind of blurry. You see there, I was up 62 pips in that trade. That's just one trade. This really isn't about a proof video or anything like that, but different trades that I put in here. I post just this documentation of the journey. I'll never claim to be a guru or anything like that. But see, this is another trade I took on a GBP news. You'll see it shoot up. You see I had a buy entry right here at 0.5. And then the news gets announced. And I'll just give this a minute just so you can see I'm not just making up the stuff. Oh, this isn't the one. I don't know where it was. Oh, this is it. Okay. Yeah, here it is. Trading news can be risky, but if you have faith in your analysis, yada yada yada. So this was the trade. My bad, wrong video. But anyway, you'll see I had a buy entry down here near the low of the day, and then the price gets all crazy, like it often does with pound pairs, and then it's going to shoot up in line with my bias, which is why I bought it on that red candle there. You see it starts shooting up there, and the spread widens and all that type of stuff. So anyway, but like I said, this isn't a proof video. It's really about the lessons. So let's just get into it. If you want to see more stuff like that, just follow me on Instagram. But let's just get into it. So who is this video for? This video is for people who are interested in Forex, new to Forex, and have been trading but want to learn more about it. I'm definitely a student of learning as much as I can about it. I watch lots of videos, read tons of books by other different traders and things like that, and just document everything. So a little bit about me. If this is the first video watched about me, I am a former teacher. I do still work. I work for a natural gas company right now. So I do have a full-time job. I do not trade full-time. Okay. So, but I have an educational degree in, or rather I have an English degree in English language and literature. I do not, I don't have anything to do with banking or finance. I have no formal educational training in that. Everything I have has been learned by courses and talking to people and different things of that nature. So I do not have like a finance background or anything like that, which a lot of other traders do as well. But let's get to the lesson. That's a little about me. I'm married, father of 2. I like to trade London session. I know people ask about that. How many pairs do I watch? Anywhere from 5 to 9. So that's that. All right, so the lessons that I've learned. This is after a year of trading. So if I can go back and do it all again, even though I hate that question, because your bosses teach you who you are, and you learn from those lessons, those hard lessons you have to learn. What would I do differently? What would I tell anyone? What are the lessons that I've learned? Number 1, manage your risk first. Okay, know where you want to get out before you get in. So many traders get into a trade thinking about how much money they can make. I had to learn this lesson the hard way, and I also learned it from a more experienced trader by the name of Paul Tudor Jones. If you don't know who he is, he's worth a Google search. Okay, but he always knows his downside before he takes any type of trade. In other words, he knows how much he's going to lose. Me, when I started out, my only focus was, if I get in this trade, I can make, I can get 50 pips, and if I get 50 pips at a standard lot, that's $500, and this, that, and third. I had dollar signs in my eyes. I don't think like that anymore at all. Okay, I'm constantly protecting my downside because of how fast the market can move. Every time I take a trade, my stop losses are fixed 16 pips, 16, 17 pips, somewhere in there. That's as much risk as I'm willing to take, and I never risk more than 2% of my account balance, ever, ever, ever. Okay, you're a risk manager first and a trader second. If you cannot learn to manage risk, you will blow an account on a regular basis. You'll be up. You can take a 500 account, turn it to $2,000, and then lose it all with one trade because you never learned how to manage risk. You have to learn how to manage risk first and foremost. If you keep your losses small, you will be able to trade forever until the day you die. But if you don't, you'll be that guy that can flash those numbers on the short term, but over the long term, you're going to be blowing account after account after account. Why? Because you might think that you're a good trader and you think your entries are on point. One bad entry with little risk management, and while you're waiting for the market to turn around and go in your direction, you're going to go broke. Ask me how I know. Okay, as you see that drawdown get bigger and bigger and bigger, but you're thinking that, okay, if I just hold on, it'll turn around. It ain't turning around. Okay, so just get out. All right, save your money so you can make another entry. Okay, don't wait for the market to turn around. Believe what that chart shows you. That chart will never lie to you, ever, ever, ever. Okay, so learn how to manage your risk, and you will be okay. All right, learn how to manage your risk. That is number one. Number one thing. Number one. Okay, if you don't get anything outside of this video, learn to manage risk. Learn to think about downside. All right, so there you go. Number one. Number two, identify the trend and trade with it. Form a bias and trade in line with it. So the market's going to do one of three things. That's the beautiful thing about trading. It either goes up, it either goes down, or it goes sideways. That's the only three things any market can do. Okay, it can't form a loop-de-loop. It can't. It's not a roller coaster, so to speak. It's going to go up, down, sideways. So if you believe that at any given time the market is going to go up, you're going to look for long positions. If you think that it's a bull market or a bear market and the market's going down, no matter what you're trading, form that bias. Look for a good entry to go short. It's just that simple. And if your prediction or your bias is wrong, then you can either reverse your bias, okay, or you can wait for a better setup. Now, depending on where I am, sometimes I'll wait for a better setup. I'll think, well, I think it's still a bear market, so I'm going to wait maybe till the next London session and look for a better short entry then, maybe at the high, well, definitely at the high of the day or as close to it as possible. Go short and ride it down. But I still think, maybe this was just a little retracement and the trend is still short, so I'm going to wait. Other times you may have to reverse it, but at the end of the day, you got to make a decision if the trend is long or short and trade in line with that bias. All right, so identify the trend. Do not trade against it. So you have some people who are counter trend traders. I'm not one of them. Following the trend to me is very important. Okay, next, compound your account. Now, I had to change your heart with this one, but compounding your account is so very key. I made a different video about the power of compounding on a different video, but I'll go ahead and I don't have a problem demonstrating it. So let's just see here. I appreciate my father making this tool for me, showing how to compound an account. And I'll just show you. I'm just going to break down the numbers, and you'll see exactly how compounding an account looks. And if you've been looking at the Forex videos for any length of time, you've probably seen this in different manifestations. But in this sense, let's see. Waiting for my pages to appear. See, this is just my Forex calculator here. And projections. Yeah, okay. So this is with it might be like a $2,000 account. I think, no, $1,500 account. Okay, so this is, for example, the compounding of a $1,500 account. So you'll see here in 30 winning trades, and this is at 5% gain and a 2% loss. Okay, but these are all 5% gains. Okay, so if you compound the money that you make, you can take a $1,500 account to a $5,600 account in 30 successful trades at about 40 pips per win. Okay, now will it go like this exactly? Probably not. There may be some days that you get 20 pips. Some days you might get 30 pips. Some days, though, you might get 100 pips. So you might be able to do this in a shorter amount of time. But at the end of the day, this is all compounding. This is the lot sizes over here, the risk that I would take. So on a $1,500 account, remember that my risk-reward ratio, I'm not doing standard lots, okay? I'm only doing, this is about a 0.2 lot size, rounding up. Okay, this is not two standards. This is not a standard, like, like almost two standard lot. That's not, the decimal's really in the wrong place. But this is at like a $2 a pip. All right, so that's that. All right, so that's the power of compounding, though. So learn that. This is not the video for that, but it's definitely worth learning. So we'll get rid of that and go back here. Okay, so make compound interest your best friend. Some people trade fixed rates, but meaning that no matter how big my account is, I'm going to take standard lots on every trade. look, if you got $100 account, you're doing standard lots, or you're trying to really maximize that leverage, it might work sometimes, but at the end of the day, the more you trade, the more you stand to lose. So it's best to use that risk management, like I talked about earlier, and compound your wins instead of using a fixed rate approach. I used to do that, so I've been a recent convert of that, using a fixed rate approach, sticking with 0.5, half a standard, no matter what. If I had $100 or $1,000, it doesn't matter. I'm going to just fixed on dollars per pip. But I was doing the wrong thing. I'm willing to admit I was wrong. Well, I'm not going to say wrong, but my approach changed. Some people do that. Maybe you can make it work. I found that it wouldn't work. It's not successful over the long term. So I would not recommend that. Compounding your account is the best way. And as you get to a comfortable balance, I heard about one guy. He has a $5,000 account, and he manages to live off of that. He'll grow it to $5,000 as a bankroll. He'll trade. Say he can grow that $5,000 to say $7,000. He'll take out $2,000 for the month, pay his bills, do whatever. Start back over the next month with $5,000. Just repeat the process. So that's what I mean by compounding the account. All right, so here we go. Next, do not trade without a plan. I managed to design a plan. It's not anything original. Please don't. I'm not some guru. But my plan fits within the realm of the market maker method. If you don't know what that is, Google it. So plenty of people have heard of it. I only trade off the high and the low of the day. And that's pretty much it. But in terms of my market analysis, things like that, I had to devise my own way of doing that. I had to devise my own way of really analyzing the market. I don't use indicators. I don't follow dots. I don't take signals. I don't trade anybody else's plan but my own. Don't follow your hunches. Don't follow your gut. Definitely don't follow anybody else's plan or anybody else's signals. If you're using signals, I don't care how successful these people are, it is not a recipe for long-term success. Okay, these market makers, long-term traders, folks who really know what they're doing, they don't do that. They do not trade with indicators. They do not wait for dots to appear on a screen. It's just, and that's what I want to be. I can't think of any long-term traders. And if you know one, hey, feel free to shout them out in the comments. But I don't know anybody who's serious about trading currencies that trades in that way. I haven't heard of them. Okay? They may offer signals. They definitely aren't taking them. So that's that. Don't trade without a plan. Once you find your plan, stick with it. Form it. Don't just show up to the chart and say, oh, okay, well, I think I would go up, so I'll just take it. Form a plan, stick with it. Okay, next. Bad things happen when you break the rules. In other words, when you have your plan, when you have your trading philosophy, then that's something you have to devise. Okay, that's something you got to devise on your own through trial and error. Like for me, my stop loss is 16 pips. So I know automatically 16 pips now. What that means is that if I let a trade go against me, 20 pips, thinking, maybe it'll turn around, maybe give it a little more time. I have to realize that if that trade goes down 25 pips and I lose more money, well, see, I broke a rule. Okay, I broke my system. So I don't have anybody to blame but myself. I can't blame the market for me losing more money than I should have. I should have stuck to my rule in the beginning, because you can always get back in. But it's good to cut a loss because you can always get back in. If the market does turn around, okay, you want money to actually get back in the trade. But if you suffer through tons of drawdown, waiting for it to turn around and then it turns back around, maybe you didn't make as much. By the time things go into consolidation, maybe at the day's end, you might still be negative, and then the market might drop again if you have a long position. So at the end of the day, you want to save your coins for a better entry. But if you break the rules, okay, you don't have anybody to blame but yourself. You want to make designing a system a priority. You want to get to the point where when you sit down at that chart to actually trade, okay, your brain should be off because you've already done this. You've made a plan the day before or the week before or whatever, what you're looking for. Once you see it, you take it. Okay, so whatever your rule is, maybe your rule is, okay, I want a 23 pip stop loss. If it gets 23 pips, I either set the stop loss myself so I don't have to worry about it, or I'm just going to use a mental stop and just say, okay, once it goes down 23 pips, I'm out the trade, and actually do it. But if you break that rule and then you're upside down 100 pips, can't blame the market, okay? But when you break the rules, no bad things happen. So those rules are in place to protect you. So it's like a speed limit. If you do 100 miles an hour and 35, all right, get pulled over. That sign told you, okay, hey, this is the limit right here. If you go, you can go over it, okay? And it could work out for you. You might not get caught and get to your destination safely, but you might not. So it's best to just play by the rules that you set when you're trading, all right? This is a little charting tip that I learned from a video. I wish I could remember the guy's name. I would definitely give him credit, but I don't remember it, so I can't. But the 5 candlestick rule, I noticed this. I recommend this for 15-minute charts or above for anyone who's knows about taking entries, etc., they might wonder where do I look for entries? I look for entries between the 1 hour and 15-minute chart. Those are the only two charts I really use. Okay, I do my analysis on 1 hour charts. 15-minute charts I really use to make good entry. But there's the 5 candlestick rule that I learned. That is this: it is very rare. It's not impossible, but it's very rare to see 5 candlesticks in a row that are all the same color. What do I mean by that? Let me see if I have a picture of it on Instagram. I doubt I do, but if I do, I'll show you. I think this might be the closest example I can see. If you see here, these red candles, I hope you can see my mouse. 1 red, 2 red, 3 red, 4 red, 5 red. Okay, now we got a 6th one right here. Okay, so like I said, it's not perfect and it's not 100%. Okay, but look, you got a green right there. So it's very rare to see 5 candles in a row. And if you get 6, you're going to look for a reversal. Now, this is the day near session end, so I wouldn't recommend taking a trade here. But normally, okay, all right, if you see 5 candles, could be 3 candles and then a reversal, or a 5 candle and a reversal. But typically, though, if you see 5 candles in a row, all red or all green, I'll be anticipating a reversal. Okay, so back test that on your own if you want to see how that works for you. But to me, it gives a good signal to actually be on the lookout for a reversal, because as you can see here, my entry was long and I did win this trade, and that was that. So, but the reversal was here because this is kind of a signal to me the day before. We got 5 reds. This is a 1 hour chart, so a reversal should be pending. And then I took it long, and that was that. So 5 candlesticks. That's something to just look for. And it's good for entries as well, entries or exits. So if you were long, or for instance, the opposite is also true. If you were short here off the 200 EMA, you took a short position right here on this pin, say, you got 1, 2, 3, 4, 5 hours. You got 5 whole hours straight profit, no drawdown. All right. But once you get right here, 5, I probably wouldn't have been out after the 5th red, because I'm thinking, okay, I'm expecting a reversal, so I'm going to go ahead and get out. So it's good. It's a good signal for an exit or an entry. Good entry short off the high of the day right here, or a good exit after 5, and then you got 1 more candle, 6. You could have got out here while it was solid red. But yeah, 5 candlesticks is a pretty cool thing that I saw. But like I said, if you're trading like a 5-minute chart or a 1-minute chart, can't help you. I don't do that. I wouldn't recommend it either. Okay, so that's that. So 5 candlesticks, all the same color too. Don't discount dojis like these little things here. Like you're looking at 1, 2, 3, 4. And then you got a red, that doesn't count. Start over. All 5 candles have to be the same color. Anytime that pattern gets thrown off, it resets. Okay, they all have to be in a row. That's the strongest confirmation you can see of either a reversal coming or a good sign to get out of the trade once your tech form your bias to get in. Next up, the Mayo equals money. What is the Mayo? Mayo is a nickname for the 200 EMA, the guy that I learned my trading from. He calls it the Mayo. Some of you guys know who he is. But the color of it was just like an off-white, so he compared it to mayonnaise, so he called it a Mayo. But the Mayo equals money. What does that mean? It's a 200 EMA. And it's good that I have this chart here. Now, my Mayo on this chart is green because there was a different EMA that was, I think, the same color, different color. But either way, this right here is this green line is the 200 EMA. Whenever you see price action around the 200 EMA, good things can happen. This is off the 1 hour chart. So as you can see here, big old M pattern. Okay, some of you guys know this. This is just basic. All right, so as you can see here, resistance, resistance. The 200 EMA is either going to act normally as a support line or a resistance line. And it's where powerful moves can take place. So you got one hit here, another hit here, and then straight tank. Okay, so I love seeing the 800 EMA or 200 EMA around the high or low of the day because I can take that as a possible entry signal. So that's one lesson that I learned. I didn't learn that actually until months and months later to really utilize moving averages. But this is the moving average I paid the most attention to. Not the 800, not the 50, 200 EMA. I love it. All right, next. Every trade should have 1 of 4 outcomes. I learned this concept from, I think his name is Joseph Burtz. I think. I'm not 100% sure. On Instagram, though. He's a good guy to follow. But anyway, every trade that you take should result in a small loss, a small win, break even where you don't make any money, but you don't lose any either, but a big win. This is how you trade forever. Okay? This is how you can trade forever. The big win makes up for anything else that can happen if you keep your losses small. If you are taking big losses in relation to your account size, okay, you're not following this concept here. You should never have a big loss ever, 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 ever. You might think, well, that's impossible. You know, I can You know, what if I risk, if I lost half my account, you know, what's going on there? You're not following rule number 1 of risk management. You should never put yourself in a position where you can lose half or all of your account, ever. But the thing is, you have to be disciplined enough. Now I say you, but we have to be disciplined enough to manage our risk as we go about trading. But to me, it's not acceptable to have a $1,000 account and blow it in 2 days. Unacceptable. Now that's the part. When you start out though, you got to give grace to the beginners, because I've been there. I've been there. Okay, I've never blown 100% of my account, but I've gotten those margin calls, and it is not a good feeling to find out. You know, I got 3 positions open, and then I got 2, and then I got 1. I'm like, what's going on? I didn't close out that trade. But no, the broker closed it out for me because I was running out of margin. Okay, I was upside down. I was done. Okay, and they owned me for the day. All right, but that doesn't happen to me anymore because I don't allow it. I keep my losses fixed to a 16, maybe as much as 20 pip stop loss. That's it. That's all I'm willing to lose. Okay, and no more of 2% of my account. That's it. I can't tolerate big losses. I want to trade for the rest of my life, but I can't do that if I'm blowing an account every other month. Okay, so I'll take a small loss. I'll even take a small win. I'll take a break even, and I'll take a big win. What's unacceptable is a big loss. Stop taking big losses. Okay, and if you're new to trading, God bless you. Don't even allow yourself to have a big loss. It's not a part of the game once you know what you're doing. It really isn't. Yes, you'll have a loss, but how big it gets is up to you. And you head that off by really just setting a stop loss. Okay, I know people hate to hear that, but the next lesson is going to really deal with that, setting stop losses and things like that. So how do you get over that? You got to kill your ego, kill your pride. This is something I have to do on a daily basis because we all want to be right. Everybody wants to be a guru. You want to build a following. You want to, you know, be right on 100% of your analysis. Guys, every single successful trade I've gotten has been a result of a trade I got wrong. Like, for instance, I don't know. I think I shared it on Instagram. I may not have. Oh, yeah, this one. Yeah, this one right here. You'll see here. Look at this sell trade right here. You see that right there? And you see 0.5, okay? Not taking a big risk on that. And I sold right at the tip of the high of the day. This was a great trade. I actually got out of this trade too early. Okay, and you'll see there, look at that, 200 EMA, all right? I'm just following my rules, okay? That's all I do, okay? But I shorted. But why did I take this trade? Because a few weeks ago, I was on the other side of this trade. I had a long bias thinking that the support was right here, that the trend was long. I was expecting a reversal. If you see here, trend going down and then going down, and I expected the reversal to be right here. That was not the reversal, okay? You had a doji here, and then they spiked up, final stop hunt to get all the short holders, and then just tanked it. Okay, or rather I think they probably grabbed the pending orders on this one. I try to figure out what the market maker's doing. I try to trade in line with him. So a tick up to pick up the long orders for the folks that were expecting price to break out through the 200, snatch those guys, drag them down, put in an immediate drawdown, and I want to say CAD tanked for the rest of the day. This trade was just yesterday. Just yesterday that I took this trade. Yeah, you see here one day ago. And I got out too early because CAD had news at 8:30, and that was the catalyst that really just reversed things. But I love the track. You see how the 5 and 13 EMAs look like they're about to cross over, and a lot of people trading like MACD crossovers and things like that. They're thinking, okay, this is my chance to go long. They're going to stop hunt down to the bottom of the below of the day. I can get the price cheap, and it's going to come back up. Guys, price never came back. Okay, all these guys going long were put into immediate drawdown. All these folks here that went long, immediate drawdown. Gave them a little hope here, but the real trend was short. Right up here, short, and just kept right on tanking. Okay, but this isn't a technical analysis video. This is just about killing your ego and your pride. You will not get them all right. So the reason why I got this one right was because I had to know on the other side of that trade that I was wrong, and I learned from it. You will not get all of them right. It's a part of the game. Nobody bats 1,000, but you have to think about the baseball analogy. You can get pitched to 10 times. Hit the ball 3 out of those 10 times and make millions of dollars as a baseball player. Okay? Look at batting averages for any best baseball player you can think about. Matter of fact, let's take a look at one. Who's the best ball player you can think of? We'll just say Babe Ruth. Batting average. Batting average, .342. Do you realize that is a 34% batting average? If you got a 34 on a test, that is terrible. That's an F. But in Forex, it could be an A. All right. So that's If you had a 0.34 win rate and with good risk management, you might be doing okay. Why do I say that? Because if you learn how to manage risk, even if you miss on 7 trades and get 3 right, the 3 will be big enough winners, they'll eradicate all the losses. Because no one expects anyone to hit all the pitches that get thrown at them. It just doesn't work like that. It's the same with trading, guys. Okay, Babe Ruth is considered one of the greatest baseball players who ever lived. But he still, you know, out of every time he got pitched to, he only hit about 3 to 4 pitches out of every 10. You throw the ball at him 100 times, he's going to hit it 34 of them. That's terrible, just from a number standpoint, but it's good, too. All right, same with trading. Don't seek to bat 1,000. Just seek to be profitable. All right, and 3, my personal goal is about 50 to 60%, right? I'll settle for 7 or 8, even 90%. I'll take that, too. But at the end of the day, by managing risk, I'm not really worried about my percentage. I'm just worried about trading forever, okay? But part of that is killing your ego, killing your pride. You just won't get them all right, okay? You can do hours of analysis, swear you're right, and then the market does the exact opposite of what you're going to think. Just believe the chart. The chart does not lie to you. So take it for what it's worth. If just because you think that the price action should be going one way and it's not, does not mean that it just means you were wrong. That's it. It's just feedback. So you can either wait for a better entry, stick to your bias, and wait for a better entry, or reverse your bias. I've done that too. Sometimes you just have to be flexible. So it just depends on what your analysis says. You can wait. It's okay to wait. All right, but kill your ego, kill your pride. Don't be the kid that touches the stove and the stove's hot, and then you're going to put your hand back on the stove thinking that stove shouldn't be hot and leave your hand there and you're getting burned. That's what it's like to take all that drawdown because you think the stove shouldn't be hot. Just take your hand off of it. Hey, just get out. You don't have to put your hand on that stove again. All right, so just learn that way. And the last lesson. The most successful traders, this should be traders, so allow me to fix this typo. Do not deviate. What does that mean? Once they have a plan, once they know their method, they do not stick to it. I mean, they do stick to them, sorry. So if you're blessed to be under some guru or some mentor or whatever like that, don't go adding your own flavor to it. Everything I've done and every type of method I've done of analysis has still fit within the frame of the market maker method. Because that's how I trade. That's what I believe in the most. You have to feel like whatever you're doing has to fit your personality. And you want to, once you hammer it down, you want to make it seem as boring and systematic as possible. The time to be creative and analytical and do the back testing is before you trade. But once you sit down at the computer, all you're going to do is look at your plan, and when you see your setup, you take it. That's it. That's it. You don't have to, you do all the hard work takes place before you trade. But trading in and of itself should be effortless. Okay, that concept did not come from me. It came from some guy I can't remember who was doing well for himself. But the actual process of trading should be effortless. I compare it to when I used to be a teacher. I used to teach 6th grade. I've taught 8th grade. I've taught 9th grade. I've taught 10th grade. Okay. My lesson planning and making my lesson plans, that was my time to work hard. But teaching in and of itself should not be a hard work. The hard working should not be a hard profession to take upon, because when you do your planning beforehand, you give the work to the kids. The teacher should not be the hardest working person in the room. What does that have to do with trading? That means that I do my job before those kids even show up. So by the time the students show up in the class, I got everything mapped out. So now it's their turn to work. I already did the work. Okay, so now it's their turn. So consider your money like your students. Okay, so if I'm teaching, so if my money is my students, I show up. When I show up to that chart, I got my lesson plan ready. When it's time to take action, I let my money carry out the plan. That's it. Then I let the chips fall where they may and evaluate the results afterwards. Okay, but trading should not be strenuous. It should not be stressful. You want to get stressed out? Get stressed out when you're making your plan. Be stressed out before your money's up. But once you follow your plan, put your money up, and set your stops and your take profits, that's it. And have faith in your analysis. And if you're wrong, hey, you only lose 15 pips. You realize that if you got a 15 pip stop loss or a 16 pip stop loss, and you're only risking like say 2% of your account, that loss is so minor, it's not even going to bother you. For instance, let's do this, and then I'll wrap this up because this is the last lesson. This is why I don't get bothered with stops so much, or with losing money, losing a trade rather, not losing money. Losing money always sucks, but losing a trade. let's say we have a let's say we have $1,000 account. All right, and this is the calculator that my father gave for me. It said that this calculator is reviewed more in detail in another video on this channel. It's still loading, so just bear with me. But this is why you shouldn't be bothered by stocks. Let's say we have a $1,000 account. Here's my mouse. There it is. All right, $1,000, $1,000. So I know before I get into that trade, I already know I'm out at 16 pips. I'm gonna lose $8. That's nothing. I'm sorry, $20. Okay, so I didn't let the math work out. Okay, $20. That's nothing, guys. That's nothing. I'm not tripping over $20, a $20 loss. Let's say I come back, so then my account balance streaks down to 980. All right, so now I'm down to 980. And it all, I'm so thankful to my dad for making this for me. So it makes trading a whole lot easier. So I know automatically that next time I trade, I'm fine to risk about 0.12 pips. That's about $1.20 per pip to make it easy. Okay, and then I win. Okay, so I lose one and then I win one. So my loss, I started with 1,000, lose one, win one. That's a 50% hit rate. But my new balance is now $1,029 with a 50%. Basically a break even in terms of trade. So it's like I almost didn't trade at all, but look at that. I'm still up. I made $30 overall. That's the power of risk management. Okay, but at the end of the day, why is it like that? Because you want to make your boring as boring. You want to make your trading as boring and systematic as possible. All I do is just follow my plan and follow this calculator. That's it. That's it. That's all I do. I don't try to get cute. I don't try to get creative. I just follow what it's already set up. My brain is not even. My brain doesn't have to do anything. It is a system that I'm following, and I follow the process. The process is greater than the result. So many times, and I've been guilty of this, we follow the results. We always want results. You know, you got to focus on your process. Okay, how did you come to the conclusion to take that trade? Okay, as long as you're at peace with how you took that trade and it's a good setup, then the rest will take care of itself. Okay, but good trading is really not boring. It's not really not exciting. It's not sexy. It's just the same kind of things day in and day out. That's it. Because the chart can only do 3 things: goes up, goes down, goes sideways. I've been trading for over a year, and I see the same things over and over at different times of the day, in relation to different news releases. I've seen so many non-farm spikes to the point now they're almost predictable. Matter of fact, non-farm is this Friday. Hopefully, I'll be able to do a review video on that. But I plan on trading it. And here, let me say this: I don't trade non-farm live. I don't have any money in the market while non-farm is being announced. But either after it, around U.S. time, 9:30, 9:35, I'll take an entry on non-farm in relation to a bias if I have a bias. But if I don't see a setup, of course, then I'm not going to trade. But that's that. But you want to make it as boring and as systematic as possible and focus on the process. Okay, so those were the 10 lessons that I've learned from trading over 365 days of trading currencies. I hope they're of service to you. I'll do my best to make more videos. I've been just really focused on getting my analysis better to make better videos for anyone who's a subscriber to this channel. But in the meantime, though, I really do hope you find success in your trading career, find a system, and try and find a method that fits your personality. And I definitely appreciate you watching. Be sure to follow me on Instagram at eemitchell07. Subscribe to the channel, like the video, leave a comment, and thanks so much for watching. Take care.